right way on this. So, and he's always been, well, because they've been ruling so much in his favor on the emergency docket, he's been very complimentary about the court. But we'll see what happens. I doubt that's going to last.
All right, we'll stay on top of the president's social media output here today. June Grasso, thank you so much. We appreciate it. June Grasso, a Bloomberg Law host here, joining us here for this momentous decision here that U.S. Supreme Court struck down President Donald Trump's sweeping global tariffs, undercutting his significant economic policy and delivering his biggest legal defeat since he returned to the White House. That is according to Bloomberg reporting. It's also impacting the stock market here. We've got stocks moving a little bit higher here. Let's check in with Nathan Hager down in Washington, D.C. and get a sense of what's going on out there in the market and maybe what stocks are being impacted. Nathan.
Yeah, we are seeing a big stock market reaction. We saw a big pop across the indexes once that decision came down across the Bloomberg terminal. There's been a lot of back and forth in the market since then. Right now, stocks are firmly in the green, though off some of the session highs. We checked the markets for you all day long on Bloomberg. On this important day at the Supreme Court, the S&P 500 right now is up 0.4%, a gain of 26 points. 6888 is the S&P level. The Dow Jones Industrial Average is up 0.3%, up 146 points. The Nasdaq Composite is higher by 0.5%. That's a gain of 112 points. We are seeing a big gain in retail stocks in particular, with the Supreme Court striking down President Trump's emergency tariffs. Looking at Target, those shares are up nearly 2%. Nike up 2.1%. Lululemon up 2.7%. Williams-Sonoma is up 3.25%. Right now, 7 of the 11 main industry groups in the S&P 500 are on the rise, led by communication services and consumer discretionary, as you might imagine. Healthcare and energy, the biggest decliners right now. 10-year Treasury down 7/32. The yield up more than 2 basis points following the High Court decision, 4.09%. The yield on the 2-year is at 3.46%. Got to keep an eye on the oil market as well, with tensions between the U.S. and Iran, and President Trump saying he hasn't ruled out a limited strike on Iran. Right now, West Texas Intermediate is little changed, $66.44 per barrel. Along with the Supreme Court decision, we got some economic data from the University of Michigan. Their final read on consumer sentiment for February rose less than expected, 56.6. Optimism among wealthier Americans was offset by declining confidence from people who haven't benefited as much from stock market gains. We also saw inflation expectations dip a bit as well. On 1-year inflation, 3.4%, 5 to 10-year, 3.3%. And new home sales came in 745,000 in December on an annualized rate. That was better than economists expected. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Nathan, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and at Bloomberg.com. I'm looking at the top live. Again, great reporting, real time on this breaking story. Sean Donnan, senior economics writer, he writes, "It's not overstating things to say this is a historic decision that applies on at least 2 fronts. Number one, the policy at issue. Trump's increase in tariffs last year was the largest since the infamous 1930 Smoot-Hawley duties. Number two, its application to presidential powers over the economy. Scholars in the lead-up were calling this the biggest case in economic policy realm since the Youngstown Steel case in 1952, in which the court blocked Harry Truman's bid to nationalize steel mills during the Korean War. Others have likened the idea of Supreme Court rebuking Trump on tariffs to the court's fight with FDR over the New Deal." So
a lot of historical context there. Certainly a huge landmark decision by the Supreme Court determining that President Trump's global tariffs are illegal. Let's bring in Henrietta Trade. Henrietta is our go-to expert on all things policy and economics. She is the managing partner and director of economic policy at Veta Partners. Henrietta, the market had largely anticipated this. We saw it with the reaction in certain retail stocks, companies that would benefit from the rollback of these tariffs. How are you looking at this?
I agree. This is just a tremendous day. A huge win for the Constitution, for folks who cover tax policy, for anybody who remembers the Revolutionary War. We fought against specifically a taxation power that Congress did not have any say over. So this is, in my opinion, the largest and most impactful macroeconomic ruling the courts have ever delivered. So just a tremendous day. It is in line with what the market was expecting. You can see that investors were very prepared to rip the retail stocks, everybody who's been exposed to the 40% trans-shipping tariffs, the ad hoc 50% tariffs on Brazil, the wide-ranging threats of 200% tariffs on French wine that have just been spewing out of the White House for 12 months now. So it's really an exhilarating day, an incredible day for the Constitution, in my opinion.
Henrietta, is this, do you think, embolden any of President Trump's adversaries, whether in Congress or just within Washington, D.C. apparatus, that maybe this gives them a little bit more confidence to push back? Is there any reason to believe that?
Absolutely. I think there's two ways to look at this. First of all, this is exceptional news for President Trump. Americans hate the tariffs. They know their taxes, they know that they're driving inflation, and they don't like them. So now that that authority has been stripped away from him, the president no longer has to collect these taxes. It's up to him to decide whether he wants to migrate into new and different authorities, like Section 122, that give him the ability to impose tariffs at a 15% rate for the next 5 months. If he wants to do that, he can go ahead on. But the American public will be very grateful that the Supreme Court struck these tariffs down, and even more grateful if he keeps them off. So that's one way of looking at it. And Republicans on Capitol Hill are staring down the barrel of a very ugly affordability narrative election cycle, where we've seen races as diverse as Texas swing 31 points away from President Trump just since he was elected. Those are tremendous losses for the Republican conference, and most of it is driven by the president's handling of the U.S. economy. It's influenced not just the traditional independent voter that we are always concerned with, but also with young male and Hispanic voters who have driven the president to his second term. So a lot to see here.
A lot to see here, and it's not just American stocks that are benefiting. I'm looking at, for instance, LVMH, Hennessy in Europe climbing on the news, up 4.4% in European trading. Yep. So companies that rely on exports to the U.S. also benefiting from this ruling. Paul asks a really important question, Henrietta.
Basic.
It's very basic. Are tariffs rolled back starting today?
They are illegal. So at Border Patrol, one of the things that's questionable here is that the White House has said all these trade deals are still going to be intact. You know, we've signed these agreements. That is null and void. Now, if you are an importer and you are at Customs and Border Patrol, you no longer will suffer paying for these tariffs. The Supreme Court has told Customs and Border Patrol they can no longer collect them. So this is a problem that the White House is going to have to address. They have a number of trade deals that they have signed. I believe there's about 8 at this point, and many of them include a reciprocal tariff of 10% in the case of the UK or 19% in the case of Indonesia. Those tariffs are illegal. The Supreme Court has told the Customs and Border Patrol people this authority is not permitted. So it's the importers who are going to rise up and say, I'm not paying. It doesn't matter what the countries, independently decide or whatever the White House says.
So what do we expect this administration, how do you expect the president and the administration to respond here? Do you think they will aggressively try to work other tariff routes, or maybe just let this issue die and just fade away?
I appreciate the question, Paul. I am wildly out of consensus on this, but what I just described on Section 122 is just one of the many alternatives that the president has. Section 301, which is $350 billion worth of tariffs on China. We could re-up that and apply it to the EU, the UK, or Brazil. All of those have been threatened. But think about what functionally that means. It means that individual businesses will have to go out again, get their trade lawyers on the payroll to comply with brand new, potentially even unused authorities that they'll have to comply with once again. Is it a 15% tariff rate under Section 122? Does it exist now? When's the president going to put it on? What do I need to worry about with the national security tariff? The confusion and the uncertainty, which were the buzzwords following Liberation Day in April, are going to come roaring back in the event the president decides to migrate away from IEEPA and move into new and different authorities. I think it would be extraordinarily disruptive. And again, with my eye on the election cycle and the affordability narrative, the president, I think, is already on a very tight leash, and he's not going to have the leeway to fully reimpose anywhere near the revenue that has been collected by IEEPA so far. So I don't think these tariffs will ever come back at their current level, and I think they will be much more restrained going forward.
How does this all add up to what the president was planning to say in his State of the Union next week? Because affordability was something that the White House has signaled it's really going to start focusing on, especially with the midterm elections coming up. Now that the tariffs are ruled illegal by the Supreme Court, how does he fold that into his larger platform?
Man, I mean, that is a pretzel of some logic they're going to have to work through here because, of course, the president has been saying that the tariffs have been a huge boon to the U.S. economy. None of that is true. We just saw a very soft GDP print. We see that manufacturing jobs have lost 72,000 in the last year since Liberation Day. We see that prices have increased across a lot of the retail space. That's what consumers are feeling. And you can't sell the American public on the idea that you're fixing our deficit problem when the deficit continues to rise and the trade and goods deficit continues to rise. So all of the arguments the White House has made are false. And now he's going to have to sell this to the American public. I suspect it'll be very uncomfortable for the front row of the House floor when he delivers the State of the Union on Tuesday. I will certainly be watching that. But they really stood up for the Constitution here. And the president's message, if he wants to migrate to affordability, he can talk about other things like, you know, the housing agenda that they have. I mean, it's not realistic to think that a 50-year mortgage is coming, but those are the kinds of pieces that he should focus on. I imagine there will be quite a bit of grievance touted on the tariff front.
Interesting. All right, Henrietta, thank you so much for joining us. We really appreciate getting a few minutes of your time and your expertise. Henrietta Treyz, Managing Partner and Director of Economic Policy at Aveda Partners. Looking at the bond market here, a little bit of a lift to the yields on this news here. The 10-year Treasury is up a couple of basis points, 4.08%. We've got a lot of economic data today as well. Ira Jersey joins us here, Bloomberg Interest Rate Strategies here. Ira, what are you seeing in the bond market today? A lot to chew on with the Supreme Court decision, with the economic data.
Well, the economic data did not move the market very much at all. I mean, for one thing, it was relatively old data, right? You're talking about December fourth quarter data. We already have the January CPI report. So even though there were a lot of people focused on the PC deflator, it really didn't move things very much at all. You know, we have seen some, as you noted, Paul, bear steepening of the yield curve. So 10 and 30-year yields going up faster than 5 and 10-year yields. And the reason for that is that this does incrementally increase the deficit. And so the traders and investors will be a little bit worried about debt sustainability going forward because you know, we do have a situation where longer term, if this particular group of tariffs can't be met, then you're going to have an extra $100 billion or so in the deficit, and that's kind of in perpetuity. So, you know, it's not a huge move, but at the same time, it is noticeable because it definitely came on the heels of this this announcement by the Supreme Court.
Yeah, I guess the thinking is that Treasury would need to sell more bonds to bridge the deficit, and that would put upward pressure on yields, especially at the long end of the curve. Is that something where we think Treasury might address that soon, or will it take its time?
No. Yeah, no, it's going to take a very long time. So the way that they'll repay tariffs, if they have to repay tariffs, and it's a little bit unclear how and when they'll have to do that, we're going to need lower courts to opine on that. But once they do, remember that the federal government has like $800 billion in cash right now, and they've only collected an extra maybe $100 billion from these tariffs. So they can repay that out of cash, and then what the Treasury Department will probably do is increase T-bill issuance a little bit in order to make up the rest of that. So it's not, this isn't really a supply issue in the long end, and that's why you're not seeing yields up by 5 or 10 basis points, because they're not going to be increasing 30-year debt to repay these tariffs. They're going to increase T-bills to repay these tariffs. So it's not as market moving. There's not as much market risk that's going to be put out there because of this. But it is a long-term issue, right? And it is certainly something that the market is going to have to take into account over the next, 5 to to 10 years as deficits, as your previous guest noted, deficits have improved a little bit, but they're still very high.
Yeah, absolutely. So I guess, how does the Federal Reserve take this in, or does it not even acknowledge this as they, as Fed officials speak to the public, as they deliberate before their next policy meeting?
Yeah, I don't think this affects monetary policy very much. I mean, it creates more kind of, geoeconomic uncertainty, right? And that's never a good thing. But from a monetary policy perspective, I don't think this changes things very much at all. Certainly, if some tariffs have to get repaid, I think one of the questions is how do they get repaid and to who, right? Because ultimately, the consumer takes on some of the, at least some of the price increases due to tariffs. So I'm not really sure how people get refunds because of the tax repayment or tariff repayment. But ultimately, I think that certainty is always better for the economy and for markets. And now that there's even less certainty over the efficacy of these tariffs, both from a budgetary perspective and also from a price perspective, how does that permeate into things? And I think the Fed is more likely to sit on its hands and say, hey, let's see how this plays out over the next few months or a few quarters before we take any action. So I actually suspect it might be more of a let's wait and see from the Federal Reserve's point of view how this affects the overall economy.
Well, headline crossing the Bloomberg terminal, Senator Warren urges refunds for Americans after Supreme Court ruling. So you saw that coming there. So historically, just over the last 12 months since we've been dealing with tariffs, how has the bond market kind of dealt with the uncertainty overall, Ira?
Well, volatility, it started out very strong, right? So a year ago, when you go back to last April, we had massive volatility in the bond market because of the uncertainty around tariffs. And then that kind of went away in the second half of last year. People got numb to headlines around tariffs and a lot of the geopolitical angst that was coming out between the administration and some of our trading partners and allies. That's creeped back in at least a little bit here in the beginning of this year. And not only because of the geopolitics, but also the uncertainty around the overall economy, investments, right? Yeah, obviously, the volatility in the equity market has certainly affected the bond market far more than comments coming out of the administration. You did see after Kevin Warsh was nominated as as Fed chair, that had a little bit of a market move, but again, that was very much dwarfed by what went on with the flight to quality bid, for example, that you saw in the last couple of weeks from falling commodity prices, falling equity prices.
Ira Jersey, thank you so much for jumping on right away and giving us your instant analysis. He is our chief U.S. interest rate strategist here at Bloomberg Intelligence. We should note that the president has responded. According to Caitlin Collins of CNN, who tweeted out or posted on social media, President Trump commented on the Supreme Court ruling striking down his tariffs while inside the White House breakfast with governors this morning, calling it a, quote, disgrace, I'm told. He told those gathered that he has a backup plan. Again, that is according to Caitlin Collins, reporter at CNN. The president calling the ruling against his tariffs a disgrace, Paul.
Yeah, no surprise there. And we'll see. I guess we were talking to Henrietta Trez what the response will be from President Trump, whether he will let this kind of fade away or whether he'll use some of the other options that he does have.
The many, many different alternative options, including filing for Section 232, 201, 301, 122, 338.
Oh, boy.
Yeah, there's a lot.
Exactly. All right, we welcome back to our studios June Grosso, Bloomberg's legal analyst here. June, now you've had a couple more minutes to look at this 170-page ruling. Any
Don't do that to me, Paul. Don't do that to me.
So, I mean, it is, I mean, we're just reading some of the reporting on Bloomberg Live, really calling it a historic ruling.
Oh, it is historic. And also, it's so important because, as we've discussed before, this Supreme Court has been criticized for ruling for Trump on the emergency docket so many times. I mean, a majority of the times, more than the majority, a vast majority of the times, there are just a couple of cases where they didn't allow him to go forward with his agenda on the emergency docket. So here you have this enormous case on his, sweeping global plans. And if the Supreme Court had not done this, if they had gone against the text of the statute and had ruled in his favor, think about what we'd be saying right now. This court is totally in Trump's pocket would be one of the things that would be said. So it's so important on so many different levels, not only the level of what's going to happen now and that the tariffs have been declared illegal, but also for the integrity, I think, of the Supreme Court. It would have been shocking if they had ruled for the tariffs. So joining us now is Dave Townsend. He's a partner at Dorsey and Whitney, trade attorney. Dave, can you explain for us the basic premise of the Supreme Court's majority opinion?
Sure, June, and it's great to be with you. Yeah, the basic premise of the opinion is that the IEEPA statute, which empowers the president to take action to regulate importation, doesn't extend to imposing tariffs. And so as a matter of statutory interpretation, the president exceeded the authority in issuing the global and fentanyl-related tariffs.
So is there anything, and I know you haven't gotten through the whole opinion, but is there anything that surprised you about this opinion?
One thing that did surprise me a bit, June, about the opinion was how definitive it was with respect to the statutory interpretation question. The lower courts had been maybe a bit more measured. They had said that the use of the IEEPA authority had exceeded what IEEPA was intended to permit. And the Supreme Court, it looks to me, went one step further and said that the language of the statute doesn't permit tariffs, full stop.
So, David, what's the 6-3 vote mean to you, if anything? Is a win a win, or is a 9-0 better than a 6-3? How should the market think about that?
Yeah, I mean, I think a win is a win, right? You only need 5 to uphold the lower court and find the tariffs were unlawful. But I do think the 6-3 vote provides even a sharper defeat here for the administration's arguments. I mean, you had the justices splitting as to some of the legal reasoning, but on the whole, 6 justices said that IEEPA isn't intended and didn't permit the tariffs here.
Is it clear that the Supreme Court says this is, as they did in the oral arguments, this is Congress's role. This is not the role of the executive branch.
Yeah, I think that, June, is the constitutional dimension of this case. It's not the primary holding of the case. It's not necessarily a strictly constitutional interpretive question, but they're looking at the Constitution granting the tax powers to Congress and saying, we have a statute that doesn't clearly authorize you to impose tariffs. And given that constitutional background, we find that the statute doesn't authorize revenue-raising tariffs.
So where does the dissent find, and I know Justice Kavanaugh during the oral arguments talked a lot about what President Nixon did on the predecessor statute to IEEPA. Where do they find the authority of the president to issue these tariffs?
Yeah, so the predecessor to IEEPA was the Trading with the Enemies Act, TWIA, and the court had previously said that the language in TWIA, that is to regulate importation, did authorize limited tariffs. And so I think the dissent is pointing back at that and saying, consistent with that holding, we would find that the same language that Congress used in TWIA, they carried it over into IEEPA, would authorize the imposition of tariffs. And I do think that as a matter, if you were reading IEEPA in a vacuum, the question of whether the language to regulate importation permits tariffs is tricky. It's difficult.
Explain why it's tricky.
Well, I think the administration's argument was we can clearly ban imports under that language and under IEEPA, and they've done that for decades under various economic sanctions statutes. And so the theory would go, if we can ban imports, why can't we do something more calibrated and measured, such as impose a tariff?
Just a reminder, if you're just joining us, we're speaking with Dave Townsend, partner with Dorsey and Whitney, and June Grasso, the host of Bloomberg Law, with us here, Paul Sweeney and Scarlett Fu on Bloomberg Intelligence, after the Supreme Court struck down President Trump's global tariffs, saying that he exceeded his authority by invoking a federal emergency powers law. Dave, let me ask you a dumb question. President Trump does not respond well to legal setbacks. We know that he appeals to a higher court and authority. There is no higher court than the Supreme Court, but is there really no legal recourse for him left here? Could he, I don't know, seek to impeach a justice or 3 justices?
So, I mean, I think there's kind of 2 dimensions here in terms of what happens next. One is with respect to tariff refunds and whether importers are owed tariffs. And the second is, what does the administration do next? What is the U.S. tariff policy in light of this opinion? And the administration has been laying the groundwork, I'm sure behind the scenes, but in public too, saying continuity will carry the day as of today and moving forward. And the tariffs in one form or another will be reimposed under probably a combination of authorities. So I think, you know, the refund issue is important to companies. Moving forward, the policy issue may not actually move that significantly, at least in, you know, the near term. I think they're going to be ready to come out with something very quickly to backfill and replace the IEEPA tariffs.
All right, Dave, thank you so much for joining us. Really appreciate it. Dave Townsend, he's a partner with Dorsey and Whitney, giving us his thoughts on the legal side of this case. And of course, June Grasso, legal analyst for Bloomberg, joining us as well. All right, let's get back to these markets, get a little bit of a reset here. We'll head down to Washington, D.C. Nathan Hager.
Well, investors haven't quite reset how they're reacting to this momentous Supreme Court decision striking down President Trump's tariffs. Paul, investors initially responded with a big surge in the market, but now pulling back just a bit. Investors trying to weigh some of the ramifications here and whether President Trump has backup options. CNN reported that the president told governors this morning the ruling was a disgrace and that he does have a backup plan. Right now, the S&P 500 is up 0.5%. The Dow Jones Industrial Average is 0.25% higher. The NASDAQ Composite leading the gains right now, up 0.8%. European stocks after this ruling are trading in record territory. The stock 600 up 0.75%, right around 630. As investors think about how they're going to react to this, Oppenheimer chief investment strategist John Stoltzfus says the Supreme Court ruling isn't changing his stock outlook.
This has to be baked in and then considered what will actually happen. And it will take a while for this to take effect. And then the response is likely to see, with the current administration, the tariffs likely to remain using other tenets of the law.
Right now, 6 of the 11 main industry groups in the S&P 500 are in the green following this ruling. Communication services up 2.5%. Consumer discretionary is up 1%. A lot of the retail stocks, as you might imagine, moving off the back of this. Nike shares up 0.5%. Dollar Tree is up 2%. Walmart is down 2%. 10-year Treasuries down 3/32 for a yield up to 4.08%. That's a gain of about a basis point. The 2-year yield is also about a basis point higher at 3.47%. COMEX Gold up 1.4%, $5,065 an ounce. Crude oil moving a little bit lower now. West Texas Intermediate, it's down 0.5% at $66.07 per barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Nathan Hager, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City. Streaming live on YouTube and streaming live at Bloomberg.com/video. And of course, the news today, the U.S. Supreme Court struck down President Donald Trump's global tariffs, saying he exceeded his authority by invoking a federal emergency powers law. Let's see what this means across the pond here. Bloomberg joins us here. Brendan Murray, Bloomberg News Global Trade Editor. Brendan, how do you think this effectively is going to play out in global trade? How quickly? How do you think this might play out?
Yeah, I think we could expect the administration will pretty quickly come back with another authority that the president can use to put tariffs on basically most U.S. imports. It would be a tariff of as high as 15%, but it would only really allow him to do it for 150 days, and then he'd have to ask Congress to reauthorize it. So what you're going to see is a more restrained approach, a narrower approach, and a patchwork of tariffs as opposed to the broad, sweeping declarations that President Trump has made over the past 10 months or so. So it's going to inject more uncertainty. We don't know, what level those tariffs will come in at, and the duration is going to be in question as well. So the uncertainty factor that we heard a lot last year with companies saying, I can't really invest, I can't really hire until I know what my tariff costs are going to be. We might see that come back in to some extent, although the president's ability to sort of declare tariffs on his social media account will be restrained. That's what he's done, and either carried out threats or just made threats in general. Bloomberg Economics estimates that he's made about 50 of those such threats that he never really carried out. So it's going to affect the actual tariff rates of imports coming into the U.S., but also President Trump's foreign policy. He's used this on Brazil and Colombia, and in the situation with Iran and the Greenland situation. So all of these areas, the president has used tariffs for leverage, and he's lost that big tool today.
What does this mean for the bilateral trade deals that the White House has already signed with other countries? Are they still legal, or do they have to be re-examined completely?
Yeah, I mean, that's I'm sure the phone is ringing off the hook at the U.S. Trade Representative's office on that very issue, because if the president doesn't have the authority to impose those tariffs, those are all baked into many of the roughly 20 or so trade deals, trade frameworks that the administration has hammered out. So there's going to be a lot, just adds to the uncertainty factor, right? And so there's going to be a lot of rethinking of some of those. Some of those, the bigger ones, are still not finalized. The European Union, India, those are still in, the ink hasn't even been signed on those deals yet. So there's going to be a lot of backpedaling now to figure out how they keep this tariff wall around the industries that the administration is trying to protect, steel and manufacturing, and to reshore manufacturing jobs. They're going to have to go about that now with other legal authorities.
Brendan, one of the stickiest issues here is, okay, what do you do with all the tariffs that have already been collected? Any sense of how, if there's any rebates, how that may work?
It was described in today's Supreme Court decision as it will be messy, and there's no question about it that all the paperwork that's required to declare imports and to apply a tariff on them, those are now going to have to be unwound and refiled with the Customs and Border Protection Agency. So it's going to be a bureaucratic nightmare. And if companies don't have their paperwork in order and haven't planned for this, they're just going to be further in the line, and it's going to take even longer. I've seen customs brokers and experts in this area say, we're looking at possibly a year before you ask for your refund request, and by the time it finally makes it back to the company that paid the tariff. These are big numbers too. We're in the $130 billion territory for General Motors and Ford alone. They paid $5 billion together combined. They paid that $5 billion in tariffs last year. So this is going to be something that is going to be a meaningful amount of money to a lot of companies, big and small.
Heather Long, the chief economist at the Navy Federal Credit Union, called this ruling a gift to the economy. This is according to our Top Live blog. She said it'll force a reset in tariff policy that's likely to lead to lower overall tariff rates and a more orderly imposition of future tariffs. It will boost economic growth and provide some relief to American consumers. But Brendan, that's going to take a long time before we see that relief. It's not instantaneous, is it?
Yeah, exactly. And this is what the other way to look at this is. This could be politically helpful to President Trump to provide that more orderly, sort of methodical approach to tariffs, predictable approach. That we're seeing a lot of the issues. The economic data today showed the economy wasn't as strong at the end of the last year. It showed a measure of inflation ticking up, and so the fact that this has gone against the administration sort of hurts on the surface, but ultimately in the political season, the midterm elections that are coming up, a more restrained approach. They can kind of go slower with tariffs now. That might actually benefit, especially help for some Republicans who are hearing from their constituents that the cost of living is unmanageable at the moment.
Have we heard from any of our quote-unquote trading partners as to how they're viewing this this ruling here today? Because I would think it would give a lot of them some confidence that maybe they can push back a little bit here.
Yeah, I think what they're doing, what you'll hear is a lot of is some deafening silence from trading partners on this. They don't really want to do a grandstand about this while the president is trying to figure out what his next steps are. This is, nothing they want to draw attention to themselves about. But they'll be doing some back channeling to try to figure out what it means for those reciprocal tariffs, ranging from 10% up to 30, 40% for some of them. They'll be trying to figure out whether that now is going to become much lower, given the authorities, the more restrained authorities that the president is going to have to press ahead with.
Brendan, as we wrap up this conversation, what will you be looking at? How are you going to determine what area of coverage is most likely to be most impactful to companies, to investors, as they try to figure out how to move forward in a new veil of uncertainty?
Yeah, I think the main thing to watch out for now is how Trump reacts, both on with his in the tone of his social media, but also are we going to hear from USTR and the Commerce Departments today, even or soon, about what their plan B is. They have been talking about that they're ready for to shift gears if they have to. So we'll see how quickly they start to roll out that plan B, but it's going to be some time before it's clear how they're going to keep pressing ahead with the president's economic agenda, which is the centerpiece of which is tariffs, and how they can keep generating the kind of investments investment deals and trade deals that they're negotiating, to see if they can see if that could still stay on track, or whether it's all really going to kind of fall apart.
Brendan, thank you so much. We really appreciate getting your expertise. Brendan Murray, Bloomberg News global trade editor. He is based in London. Right now, we want to get the political angle here for the president and the administration. Gautam Mukunda joins us. He is a lecturer at the Yale School of Management and a Bloomberg opinion contributor. Gautam, thanks so much for joining us here. Again, put into context how much of a setback this is for President Trump and his administration.
Hi, Paul. This is pretty big. It's in many ways the first really significant Supreme Court rebuke of the administration. And this is a court that's kind of gone out of its way to accommodate him as much as possible. So the legal ruling is not surprising. It's not that anyone was going, oh, this was the president was okay on the law. He clearly was not. It's the fact that the court is willing to stand up to him that's really striking.
Right, standing up to him, and including by some of the justices that he nominated as well. Neil Gorsuch, for instance, ruling against the tariffs, although Brett Kavanaugh and two other conservative justices did dissent. We should mention that there's a headline here from a U.S. official. It's what we call at Bloomberg a hothead. President Trump will travel to China from March 31st to April 2nd. And I think I bring this up because this has been one of the criticisms of the administration, which is that the president has focused a lot more on foreign policy, foreign affairs, than he has on domestic issues, particularly those most relevant to Americans who feel the pressure of inflation and the pressure of the affordability crisis. Do you expect an uptick in foreign policy adventures from this White House now that we have this legal setback from the Supreme Court?
So I do expect the uptick, but I'm not sure they're related. Second-term presidents almost always focus more and more on foreign policy, partly because they are thinking about their legacy, and partly because their control over their domestic political party inevitably ebbs, since they're not going to be on the ballot again. And so every member of the Republican Party, however afraid they might be of Donald Trump, is less afraid with each passing day, just because he has less ability to influence their political fortunes. So that kind of leaves him to divert out to the foreign policy stance. But I think what's more the striking thing here is essentially is how much self-control he will be able to exert when this rebuke on what is his signature policy from a court that he thinks of as essentially his property. What's going to happen next is I'm not sure anyone can predict it.
Gautam, I mean, these tariffs have been really the centerpiece, the backbone of much of how President Trump interacts with other countries, getting them to make investment announcements in the U.S. because of the threat, tacit, explicit, however you want to phrase it, of tariffs. Has he lost that power, that leverage right now?
I mean, he's clearly lost a lot of it, and what's striking is how broad the Supreme Court decision is. It's not just saying you can't do this under this particular sort of twisting of the law. The decision seems quite structured to say you just can't do this without the court. But while President Trump got many announcements of major investments in the United States, it's really not clear that any of that was very substantive. There's some combination of sort of other countries sort of playing the game and giving him his press releases. And also, I think a lot of other countries that realized that if they waited this out, there was a very good chance the Supreme Court would rule this way. So they were just better off, giving him shiny objects and letting the game play out.
From the administration's perspective, is there anything they can do to kind of drag their feet on complying with this Supreme Court ruling?
On complying, so if they do, then we are in the midst of sort of what I think everybody has been trying to avoid, even the Trump administration, which is a direct confrontation between the Supreme Court and the presidency. That could get very bad very fast, and I think no one wants to see it. What they will probably do is find other legal sort of pretexts to try and exert these tariffs. But I think what we'll have to watch is the Supreme Court ruling does not mandate whether the money that has been already collected has to be refunded. That is going to be complete chaos. And watching that legal process as companies sue for what was, after all, we now know a clearly unconstitutional, unjustified taking, it'll be a full employment act for lawyers for the next 5 years, I guess.
Gautam, boy, if I'm in Congress today, if I'm a Republican, if I'm a Democrat, I feel like the president's been wounded here a little bit. Do you expect to see a change in tone with the president and his relationship with both parties in Congress here? And boy, we have the State of the Union coming up just next week.
Yeah, the president has been wounded. It's not once. That's not just once. This might be the most significant wound. But, there is blood in the water, and the Democratic sharks are starting to circle. I think you're also starting to see, right now it's only Republicans who are sort of leaving office. Thom Tillis is the most prominent example of people who are just sort of saying, enough is enough. I cannot swallow this anymore. But they're not the last one. I suspect they won't be the last ones. With every number that he tricks down in the polls, that's going to get easier. In some sense, I think the Supreme Court may actually have saved Donald Trump from himself a little bit, because these tariffs were not popular, and striking them down might actually help him a little bit in public opinion, depending again upon how he reacts to it. I think we're all waiting for the next Truth Social post with bated breath.
We certainly are, and we should mention that Caitlin Collins of CNN did send out a social media post saying that President Trump called it a disgrace, the Supreme Court ruling, and reportedly told the governors at the White House breakfast with governors that he has a backup plan. Gautam, what does this mean for companies that have been having to pony up the money for tariffs and now, because the tariffs are ruled illegal, have the possibility of maybe clawing them back if we move in that direction? How do they make decisions? How do they move forward with any kind of planning? How do they think through what their next year, 2 years, 3 years looks like?
I mean, that has been the central question of every kind of corporate decision-making since the day Donald Trump returned to office. The level of uncertainty is high, and it's going to keep getting higher because this is not an administration that seems to have a back down mode. My guess would be that the refunds and things like that will be handled by the lawyers, and if you get it, you get it, and if you don't, well, that is not, in some sense, that is not a decision that companies have an ability to influence. They should try to get the money back. Whether they'll succeed or not, I have no idea. What they have to worry much more about, I think, is what will the next step be? Because there will certainly be a lashing out, and does that mean that companies that have thought they had gained exemptions or thought they had stable windows to trade are going to lose that? They might.
All right, Gotham, thank you so much. We appreciate that. Gotham Mukunda, lecturer at the Yale School of Management and a Bloomberg opinion contributor. Scarlett, I think about what Brenda Murray says. I mean, this is a win for free trade, folks, but it is going to reintroduce another level of uncertainty into just trade in general. And companies, once again, saying, we're not really sure what the playing field is here. So that could be, in the short term, problematic.
Absolutely, and we've seen what it did to their forecast for the full year, for the upcoming quarter during earnings season. They had to hedge a lot because they weren't able to give any kind of clear-cut guidance. It also creates a lot of uncertainty for other nations. Countries that were negotiating trade deals with the U.S. Maybe came to an agreement but have not finalized it completely and signed it. I mean, this kind of throws everything up in the air.
Yep, and the markets seem to like it right here. The S&P is up 0.6%, particularly the tech stocks. If you look at the NASDAQ, up 1.14%. So we're getting an angle on how the technology industry may view this Supreme Court case. We'll check in with Dan Ives in just a moment at Wedbush Securities to get his thoughts on this ruling. Right now, let's head back down to Washington, D.C. Nathan Hager's got a Bloomberg Business Flash for us.
Yeah, Paul, it's brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. The Supreme Court's rejection of President Trump's tariffs has investors piling into stocks right now. We check the markets for you all day long here on Bloomberg, so right to it. The S&P 500 is up 45 points, a gain of 0.6%, trading above 6,900 for the S&P level. The Dow Jones Industrial Average is up 0.25%, up 110 points. The tech-heavy NASDAQ Composite is leading the gains, up 1.1%, up 246 points. The Supreme Court ruling is taking some attention off fourth quarter GDP that came in much weaker than expected, actually, 1.4% on a record-long government shutdown. Scott Ladner is Chief Investment Officer at Ladner Investments.
There's not a whole lot to take out of this report because, we had a government shutdown. GDP came in light largely because of that government shutdown. Nobody really knew how much of GDP was going to take out. Looks like it's about a percentage point or so was due to the shutdown. But at the end of the day, this is still like a consumer that is spending money. Consumption was fine. It was down a bit, but it was generally fine. But at the end of the day, we're going to get back to earnings. Like we're pretty much through earnings season.
Right now, of course, the focus is on how the rejection of the tariffs will affect markets. Right now, retail names with a lot of manufacturing in Southeast Asia are catching a bid. Looking at Lululemon, it's up 1.1%. Abercrombie & Fitch up 1.5%. Victoria's Secret is higher by 2.8%. Right now, 6 of the 11 main industry groups in the S&P 500 are on the rise, led by communication services up nearly 3%. Consumer discretionary is up 1.2%. 10-year Treasury now down 6/32. The yield is up about 2.5 basis points to 4.09%. Yield on the 2-year, 3.47%. Oil is still trading near a 6-month high, with President Trump saying he's not ruling out a limited strike on Iran. Right now, West Texas Intermediate is down 0.2%, just shy of $66 a barrel. COMEX Gold up 1.3% at $5,061.90 per ounce. Paramount Skydance says it has cleared the Justice Department's last regulatory hurdle in its proposed $77.9 billion takeover of Warner Brothers Discovery. But there is that one big hurdle, the fact that Warner's has already signed a deal with Netflix to sell its studios and streaming business for $72 billion. Paramount Skydance right now down 1%. Netflix up 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That's your Bloomberg Business Flash. Scarlett and Paul.
Thank you so much, Nathan Hagar in Washington, D.C. All right, as Nathan pointed out, markets are on the move following the Supreme Court's rejection of President Trump's tariffs, and we see equities in the green right now with the NASDAQ leading the way. The NASDAQ Composite Index up 1.1%. By the way, bonds are lower. That is pushing yields higher. So I do want to bring in Dan Ives. Dan, of course, is the noted analyst, the global head of technology research at Wedbush Securities, to get his take on what we're seeing in tech and whether, Dan, this SCOTUS ruling is kind of just risk on for the market overall, and that means a big lift for the biggest part of the stock market, tech, or whether this is specifically good news for tech companies.
Yeah, this is specific good news for tech companies because of the supply chain. Because the biggest worry is that tariffs, what that could do in terms of the data center build out, AI build out, chips, everything that we're seeing with China. Look, there's going to be other ways that they're going to try to go around this 232, Section 301. The reality is it's a huge blow to the tariff policy, and it's very bullish for tech coming out of the gates. That's going to be the initial take.
So, Dan, it's been, a little more than roughly a year that all companies have been dealing with this tariff uncertainty. How have the technology companies who do have a global supply chain, rely a lot on parts of Asia, how have they kind of adjusted here?
Look, I mean, Apple has moved a lot to India. Others have, had to make significant investments in the U.S. and also look to diversify their supply chain. But, as we've talked about a lot on the show, like the vast majority of the supply chain will continue to be cemented in Asia. And where you had companies starting to look at diversification, increase costs, was this going to potentially, impact the supply chain? That's off the table now. And that's something, look, big tech companies, what they'll say publicly, behind closed doors, there's a huge sense of relief right now because of this.
Interesting. Given that so many of the big tech CEOs have really aligned themselves with the president, what does this mean for the big chip makers that are outside the United States, the TSMCs, the Samsung Electronics of the world?
I mean, it's extreme positive for them because when you think about each of them, the question there was, how is that going to impact them from a policy perspective, from a tariff in terms of coming into the U.S.? And then you start to think about manufacturing. You'll continue to have some manufacturing move to the U.S. But this is actually going to put the brakes on some of the policies that some of these tech players had. Look, there's going to be Section 232, Section 301. There will be other areas that go about it. But for big tech, supply chain, chip players, memory players, it's a clear positive. There's no way to really go against that thesis.
Dan, your world has been rocked over the last several weeks by AI and the impact some people are speculating it may have on certain parts of the marketplace, including software companies, particularly software as service companies here. What's the current thinking as you talk to investors these days?
Paul, I'm calling it's the AI ghost trade because you're trying to fight a ghost because of the view that this is going to massively disrupt software. It's going to massively disrupt cybersecurity. And I've talked about it's the opposite. I think it's the most disconnected trade that I've seen in my career on Wall Street in terms of what's happened to software stocks now. But again, like we talk about fighting a ghost, there's going to be like boxes that are checked, whether it's OpenAI in the $100 billion, whether it's NVIDIA earnings next week, whether it's Apple on AI, whether it's circular financing, software companies showing monetization. This is going to happen. But right now you're fighting a ghost and the bears are loving it. But again, that will be short-lived in my opinion.
That might be the case in the equity market, but we're seeing private credit, leverage loans really come under pressure because of all those loans to a lot of software companies, many of which don't have investment grade ratings. Is credit driving the concerns in the equity market? What's leading what, Dan?
Yeah, I mean, look, if you look at Blue Owl, right? I mean, obviously there'll be like some concerns there, but then on the other hand, look at Apollo and others. So I think if you look relative to some of the exposure and what the credit market's telling you, it's still very healthy from a credit perspective. But look, no different than we saw with banks a few years ago, Silicon Valley Bank and others. there's going to be hypersensitivity to anything that happens here. But the reality is that these companies have more cash in a lot of countries when you actually go through it. The point is, like, they're going to continue to do, but look, Scar, it's like if there's 5 people trading CDS instruments for Oracle in their basement, that's going to be extrapolated, right? And we saw that like a few weeks ago. It's just a reality. Like, we're going through a ghost trade. It's an AI ghost trade, and you got to navigate through it. But net today, it's positive for tech, and that's one step forward.
Hey, Dan, you spend a lot of time in Silicon Valley, and it's just a great place to get a sense of kind of where the tech investment mindset is here. Has tariffs dialed back kind of the risk profile of some of the good folks on Sand Hill Road as they think about what technologies to fund? Is it tempered a little bit, and could today's ruling be a major change?
Yeah, I think tempered, and maybe it put like a little question mark in the back of the mind in terms of what was going to be the next policy, what was going to be the next threat, specifically when it came to supply chain, how companies are positioned. You can't just snap the fingers and change your supply chain. We're talking about things that could take 24, 36 months. This ruling, it does clear the path a little more. And I think that's something that's a positive as you're in a unprecedented build out of a 4th industrial revolution in AI. And for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
Dan, thanks so much. Appreciate you jumping on there. Short notice. Dan Ives, he heads up technology research at Wedbush Securities. Appreciate getting a few minutes of his time. Looking at the bond market, Scarlett, got yields up just a couple of basis points on the 10-year, 4.08%, up about a couple of basis points on the short end of the curve here. Let's check in with Ira Jersey, see what's happening in the rates market, and see how this change potentially here in trade policy may impact the Federal Reserve. Ira, again, I'm starting to see some reporting on, boy, if they got to refund some of this money, how are they going to afford it? Where are they going to raise the capital? Are you hearing any of that chatter these days?
Yeah, we get it all the time. We've actually already gamed this out. So this was, not one of the 2 outcomes, right? Either they were going to say the tariffs were okay, or they were going to say that tariffs had to be repaid at some point. And, it's really the how, right? So there are a few details that have to be worked out. But at the end of the day, the Treasury Department has $890 billion in cash on hand. They can use $100 billion or so of that to repay the tariffs. And then they're going to rebuild that over a pretty short period of time using Treasury bills. So from a broad market impact, it's not really going to affect things. And keep in mind, the Treasury bill, the elasticity of demand for Treasury bills is actually quite high. So, we're coming to a period where typically we have very high T-bill issuance because people get tax refunds from their everyday taxes. And sometimes the change in Treasury bill issuance goes up $100 billion in a single week. So it's not an unprecedented type of amount of money that we're talking about here in terms of the Treasury having to raise $100 billion. Now, I think longer term, it's really one of the reasons you're seeing that couple of basis points sell off in the long end of the Treasury curve. It's because this does incrementally increase deficits going forward, right? It's $100 billion or more every single year that you're not going to get in tax revenue, and that means that you're going to have to either cut spending or increase the deficit, and more than likely it's going to be an increased deficit, and that's why you're seeing that little bit of a sell-off.
In terms of demand for longer dated treasuries, are you looking for anything to change there?
No, I don't think so. At the end of the day, a lot of demand for treasuries has been coming from domestic U.S. savings. Foreigners, we made a big deal a year ago. Everyone's like, oh, what are we going to do if foreigners stop buying treasuries? Foreigners have not been net buyers of U.S. treasuries for a decade. So you're really talking about, will this change the demand for treasuries domestically here? And I don't see this changing things very much at all. If anything, it might actually increase the savings rate slightly and therefore incrementally increase demand for treasuries. But again, you have this push and pull. So even if there is that incremental increase in demand, you're still going to have higher deficits, which over time means that you're going to have more and more treasury issuance outstanding. So you will have maybe supply and demand that's more or less in balance, but it's not necessarily going to be that way all the time when, people worry about things like inflation. Like there is still a fear out there that inflation is going to come back. You saw the PCE deflator from this morning, kind of old data. I'm not sure that I would completely trust that as an indicator of what's going to come the next few months. But nonetheless, there are people who are worried that services inflation in particular with higher wages is going to push inflation a little bit higher over the course of the year. That is more likely to stop demand for treasuries, and you can see a little bit higher yields, say 6 months from now, if that inflation actually turns out to be realized.
Ira, today's ruling impact how the Fed might look at data, might think about its policy going forward here? One could argue, gee, less tariffs might be good for economic growth. That's on the one hand. On the other hand, it's like, here we are back in the uncertainty soup again.
Well, it's a good question. I think more than likely they'll wait and see how it affects the overall economy, right? Will this affect things like consumer sentiment, right? I think that's probably the bigger case of this, where if people think, oh, my imported goods that I buy regularly on, from overseas, if those are going to be stable to maybe a little bit lower in price, then I'll be able to buy more domestically produced goods, and that will be good for U.S. domestic growth. But again, it's relatively incremental. And I think that the Fed is going to look through this. And I think they have looked through the tariffs a little bit. I think they were really concerned about the price implication of this. And what you've seen in a lot of the data, like even last week's CPI data, today's PCE deflator data, goods prices are not spiking significantly on this in aggregate, right? Yes, they've gone up a little bit, but you're talking about a relatively small part of the consumption basket. I think people, for whatever reason, there's this idea that the goods that are imported are some massive part of what U.S. consumers buy. It's actually not. Most of what we buy are domestically produced services, and that spending has continued to be relatively robust. You've seen price increases in the services sector even more. Like if you go look at some of the data that we received today, services drove inflation higher in December, not goods prices. And I think that that's an important aspect that we have to consider when we consider inflation and like the macroeconomic effects. It is very small, much smaller, I think, than people really think.
Fantastic insight and context there. Ira, really appreciate your joining us. Ira Jersey is our chief interest rate strategist here at Bloomberg Intelligence, giving us the read-through on what the Supreme Court striking down President Trump's tariffs means for the fixed income market, for the economy, and for the Federal Reserve. Let's bring back our June Grasso. She is host of Bloomberg Law, for some more insight and analysis on what this ruling does mean. June, the 170-page paper ruling, you've gotten through probably the first couple of pages.
Yeah.
What are your thoughts now as you continue to look through it?
Well, so I'm struck by the fact that so much of it was forecast in the oral arguments. For example, during the oral arguments, the Chief Justice said that imposing taxes on Americans has always been the job of Congress. And that's basically what they're saying here. The president, you went too far. You don't have authority to do this. It's up to Congress to do this. So I'm sort of struck by that. And even some of the things that Justice Gorsuch said, and the fact that he is usually almost always siding with the other very conservative members of the court. He's one of the three most conservative members on the side of the president's actions. And here he went against the president. I think that's very significant. And some of the things he said were that, well, during the oral arguments, what would stop Congress then? What would stop the president from taking more powers away from Congress? If we give him this, what's the next thing? Does that mean that, he's going to be able to declare war? So I think it's really interesting that he has come out in this opinion with Justice Amy Coney Barrett, who's, sometimes she's a little more iffy on these things, but he's always in the corner of with the most conservative justices in support of the president's policy. So joining us now is an expert in this area, Jimmy Garule. He's a professor at Notre Dame Law School. Jimmy, we've talked about the oral arguments several times. Did anything surprise you in this opinion after hearing the oral arguments?
I'm not surprised with the outcome, with the decision. the ruling of the court striking down the tariffs. And I believe that many of the arguments in the opinion, and again, I haven't had the opportunity to read the entire opinion at this time, but I think many of the arguments were arguments that we heard during oral argument back in November. And I think it was a weak case for the government. I mean, again, we have a situation where the statute at issue, the International Emergency Economic Powers Act, which the Trump administration relied on in imposing these tariffs, never doesn't mention the word tariff at any time, at any point in the statute. B, no president in the history of IEEPA has ever relied upon IEEPA to impose tariffs. And then, of course, the Constitution is very explicit in Article 1, Section 8, Clause 1, that it's Congress that has the power to lay taxes, not the president. So I think the arguments were raised at oral argument, and many of those were just codified in the formal opinion that we received today.
Where did the three dissenters find that the president has this power?
Yeah, I think they're probably reading too much into the language of IEEPA. So IEEPA, there's a section in IEEPA, the International Emergency Powers Act, that states that once the president declares an unusual and extraordinary emergency that affects foreign policy, national security, the economy, then he can regulate importation. And so that became the statutory text that the government lawyers really latched on to, the regulation of importation. And the argument was that tariffs fell within that language of regulation of importation. But it's a very thin reed to go ahead and base all of these different tariffs, the drug trafficking tariffs, the trade imbalance tariffs, and some of the other specific tariffs against Brazil and India and so on, based upon that language where, again, no president has ever relied upon IEEPA to impose tariffs.
Professor, the Supreme Court chose not to rule on how any rebates of tariffs may take effect here. Is there any precedent to how maybe some lower courts may proceed going forward?
No, I think we're really kind of in uncharted waters here. I mean, so there are really, for me, two important implications, following the court's ruling. And the first is the issue that you raised. And so is the government now going to have to refund the tariffs that have been imposed going back to April of 2025 when these tariffs were first initiated? And as we know, there's been about, I think that the tariffs collected to date since April of 2025 total about $240 billion. So arguably that amount could be refunded to the companies that paid the tariffs. And so the question is, well, what's the process? What's the mechanism for doing that? How is that going to happen? How are these companies going to be able to prove that they're entitled to X number of dollars? What's the process going to be for refunding those companies that amount of money? So that's uncharted. I think it really is going to be a challenge, for the government. I think the other important implication is, well, what's the impact if that happens? What's the impact on the budget? I mean, having to pay out $240 billion in tariffs, how is that going to impact the budget? And then I guess the third implication for me would be, well, is the Trump administration going to reimpose tariffs, but doing it in a more precise way based on legislation that Congress has passed in the past that would authorize the president, or Congress has authorized the imposition of tariffs. So I think we haven't heard the end of this story. I think that the Secretary of the Treasury is going to look to existing legislation, use that legislation to reimpose tariffs and proceed that way.
All right. Well, this is something that will play out in the coming weeks. Reuters has reported that President Trump says he has to do something about the courts. And again, this is based off a headline from Reuters, so I don't know what the context of this is. But legally speaking, what could the president do about the Supreme Court's decision? In the past, he has always chosen to appeal. you can't appeal beyond the highest court.
No, you can't appeal beyond the highest court. It's really interesting that two of the justices that ruled against him were justices that he placed on the court. And so Justice Amy Coney Barrett and Justice Gorsuch are Trump appointees, and they ruled against him, and they comprise the majority of in the 6-3 decision. So I think that the president is very limited in terms of what he can do. In terms of the legal decision itself, I don't think there's really anything that he can do in terms of how he might seek to reimpose tariffs through other existing legislation moving forward. Well, that's a different issue, and I think that is probably what he's going to be focusing on next.
All right, Professor, thank you so much. We appreciate getting some of your time. Professor Jimmy Gurule, Professor of Law at Notre Dame Law School, and June Grosso, our legal analyst here at Bloomberg, helping us kind of get through some of this ruling here, the Supreme Court ruling, which strikes down President Trump's global tariffs, a 6-3 ruling. So we'll have more reporting on that coming up. Markets are higher right now. Let's go down to Washington, D.C. Nathan Hager, he's got a Bloomberg Business Flash for us.
And it's brought to you, Paul, by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide, learn how to add metals to your IRA or 401k tax and penalty free. Go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Now that the Supreme Court has revoked President Trump's emergency tariffs on individual countries, gold is on the rise. COMEX gold up 1.5% at $5,072 an ounce. And stocks are mostly in the green now. The S&P 500 is up 0.3% or 20 points. The Dow Jones Industrial Average is now little change to the upside, up 20 points. And the NASDAQ Composite still leading the gains, up 0.6%. The Russell 2000 Index of small cap stocks is now down 0.2%. Some of the retail names are churning a little bit as well. We're looking at shares of Nike. They're now down 0.9%. Dollar Tree is down 0.7%. Biggest gainer in the retail space right now is Tapestry, the luxury retailer, up 1.3%. Right now, 6 of the 11 main industry groups in the S&P 500 are on the rise, led by communication services, up 2.5%. Energy, the biggest decliner, down 1.3%. Oil still trading near a 6-month high, with President Trump saying he's not ruling out a limited strike on Iran. West Texas Intermediate right now is down 0.6% at $66.06 per barrel. The 10-year Treasury down 4/30 seconds. The yield up about a basis point, nearly 2 basis points now at 4.08%. Yield on the 2-year is at 3.47%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Nathan Hager, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube, and we're streaming live on Bloomberg.com. One of the areas that was certainly impacted by tariffs had been retail. And they import a lot of the stuff that we all wear from Asia, from China, from areas of the world that are subject to tariffs. So we can get a sense of how this might change the game here, this Supreme Court decision today. We welcome Poonam Goyal. She covers all the retail companies for Bloomberg Intelligence. Poonam, what's your initial thought here from the retailer's perspective to the extent that a lot of these tariffs are going to be rolled back?
Yeah, I think, look, it's good news for retail because at the end of the day, their costs will go down. These tariffs caused unnecessary stress in the supply chains, caused retailers to raise prices. It lowered their margins. So all that is now set to reverse. We still don't know what the magnitude of this will eventually shape out to be. You know, there's our analysts here on the government side think that while these have been overturned, you don't know what else could be added. So I wouldn't say we go to zero. That's probably not happening. But I do think that as these tariffs get overturned and as costs drop for these retailers, we should see a pickup in margins in 2026 and also a pickup in demand because, you know, the consumers for a long time, or at least over the last year, have been very concerned with inflationary pressures and just prices going up. So all that will help hopefully ease demand too.
You mentioned prices going up. Do we know of any companies, any brands that raised prices because of tariffs, where they made that link very explicit?
Yes, Nike was one of the retailers that had explicitly said that it's raising prices, not on everything, but on goods that were over $100, notably over $150. They had taken a mid-single-digit price increase. So prices did go up across retail from tariffs. They didn't go up 20, 30%, but they did go up in the single digits, mid to high single digits.
You know, the New York Fed is out with a report recently saying that about 90% of the tariff costs were borne somewhere in the U.S. chain, whether it was the importers, the companies themselves, consumers, and maybe only 10% by exporters.
Yeah, Kevin Hassett disputes that, of course.
Yeah, of course that he does, but I'll go with the New York Fed. They're pretty solid in their numbers. So from your perspective and the perspective of the retailers, Poonam, how much do you think like the Nikes of the world kind of took in their margin versus passing along to consumers?
Yeah, I would say that I think there was a shared cost across the tariffs between the suppliers and the manufacturers. So it wasn't 90-10. I find that hard to believe, because if that was the case, a mid-single digit price increase wouldn't be enough to offset the cost pressures. It'd have to be higher. But that said, I do think that, they did see their costs rise, and they did try to offset it, not just through price increases, but also through efficiencies within their organization, whether it was across payroll, whether it's through technology. We've heard a lot about these AI investments, and they've really helped improve efficiency across the organization, but we haven't seen that in the numbers. And my answer to that is it's not in the numbers because it's really just been helping offset these incremental pressures from tariffs.
We've seen companies like PepsiCo move to cut prices on some of their products, their snack products. And I'm not comparing snacks with clothing or sneakers, but if a company like Nike raised prices because of the tariffs, is there any world in which it might reduce prices or lower prices because tariffs were removed?
So I think the consumer is expecting prices to go down when the tariffs are removed. The big question is, if prices went up, let's say 10%, are they going to come down 10%? That typically doesn't happen. They don't necessarily drop to the same extent they went up. But yes, would you have some relief from the cost increases? Sure. I think retailers like Walmart that really push the pedal on price much harder and care about offering that incremental value to their customers, that's what they stand for. Those are the retailers that are probably going to push the pedal much harder on price when they get the relief from tariffs.
So what's just broadly defined right now, step back a little bit, Poonam, what's your view of the consumer here based upon kind of the results you've seen from some of the retail companies you follow?
I think the consumer is stretched. I think they're under pressure, but they're making choices. They're being selective. They're shopping at retailers that offer them convenience, that offer them speed, and that offer them something differentiated. And I think that's been the story for a little while now. I think that continues. So retailers like Amazon have been doing well because they offer both value, convenience, free shipping, and they've done well. Walmart, we heard from, they also did well on their value proposition. So I think it's those retailers that really stand out in the crowd, or those that have a fashion element, whether it's Urban Outfitters, with just the right assortments that's attracting these younger shoppers. They're the ones who are doing well.
What does this mean for furniture companies like Wayfair? And I recognize that Wayfair doesn't make a lot of its own furniture necessarily. It's outsourced a lot of that. But have they been explicit in how much tariffs have hurt them? Because most of their manufacturing is not done in the United States. I'm guessing it's done overseas.
It is done overseas, but I think with Wayfair, it's a little tricky because, as you said, they are a marketplace, right? So when you think about Wayfair, they have thousands of suppliers to choose from, or manufacturers or sellers. And if the seller wants to make a sale, they can go from one seller who may say, this sofa is $1,000 and I have a 50% margin on it. But then there's seller number two who says, well, you know what? I'll take a 15% margin on it because I want to get the sale. So the diversity and just the choice that they have on who they bring on board to offer the compelling prices has helped them offset a lot of these tariff foes that others that are vertically integrated have to deal with directly.
Poonam, we heard a lot of companies in retailers, but just across the economy, talk about shifting their supply chains to maybe parts of the world that are less encumbered by tariffs. Have you seen that in the retail space? Like, is Nike making shoes in Vietnam and not China or anything like that?
Absolutely. The supply supply chain shift has been going on since the first round of tariffs, actually, and it's only been pronounced since last year. We expect supply chains to continue to be diversified. The only difference with this ruling being overturned is that the urgency has somewhat been moderated, so you don't have to be as reactive as you would have been last year. You can take your time and be more strategic about where you want to be diversified. But I don't think that just because the tariffs are overturned, now everything will, go back to China. I think the diversification step up is here to stay.
All right, thank you, Poonam, for so much for hopping on and giving us the analysis on what the strike down of the tariffs by President Trump means for the retail and e-commerce sector. Poonam Goyal is our senior U.S. e-commerce and retail analyst here at Bloomberg Intelligence. And as we look through the different sectors that are impacted by this Supreme Court ruling, basically determining that President Trump's tariffs under the IEEPA provision are illegal, let's take a look at what this means for the auto industry. Steve Mann is our Global Autos and Industrials Research Analyst. And Steve, I'm looking at the top live blog that Bloomberg makes available to our clients. And one thing that many people may not realize is that the ruling does not pertain to the main U.S. tariffs affecting the auto industry. Walk us through what is affected when it comes to auto tariffs by this ruling.
Yes, Scarlett. Bottom line is there's no impact on the auto industry. The auto industry, the tariffs on the auto industry is under the Section 232 of the Trade Expansion Act of 1962. So it's not put in place by the emergency powers. So the baseline of the 25% tariff on auto imports is still there. Now, Trump did renegotiate with countries like South Korea and Japan to bring it down to 15. But for the most part, consumer will still feel the impact of these tariffs of, close to $1,000 to $3,000 per vehicle on average. The other thing that I want to highlight is it's the steel and aluminum import tariff of 50%. That's also not impacted by the Supreme Court ruling today. And that also has a huge impact on, the cost for the automakers.
So, Steve, what are we seeing so far for the automakers and how they're dealing with these higher tariff levels? Are they moving production? Are they changing maybe some parts of the supply chain? What have they been trying to do to mitigate the tariff costs?
That's a good question, Paul. I think I think the reason why Trump went with the Section 232 approach is that the auto industry, given its huge manufacturing base, is critical to the economy. It's critical to national security. He does want to bring a lot of that manufacturing back into the U.S. And that's what we've seen with the U.S. automaker. For example, GM actually has shifted some of the Silverado production from Oshawa, Ontario, back to the U.S. And you've seen Honda, Hyundai from South Korea making huge investments in the U.S. to set up manufacturing base. So I think that's still the course for the administration, and I think we'll still continue to hear more, probably in the next few years, more of that reshoring auto manufacturing back into the U.S.
So how do you see this moving forward? How does a GM plan for the next year, for the next 4 years, the next 10 years?
Yeah, I think they're going to have to revisit, and they're still doing that. They have done that already, revisit the supply chain, right? I think the low-hanging fruit was moving some of the auto assembly back to the U.S., but that's not enough. If the supply chain is not close to where the cars are made, freight costs will go up. There will continue to be potential tariffs in some of the components. So you're starting to see, companies, especially from South Korea, automakers from South Korea and Japan, actually asking the supplier to shift some of that production into the U.S. Just to cut, some of the freight and potential tariff costs on the auto parts. So we're going to see a whole lot of changes in the supply chain. I think one of the things that we also are keeping an eye on is the USMCA, the U.S.-Mexico-Canada Free Trade Agreement. That's up for review this year. that's going to have a huge, a much bigger impact on the auto industry. So we'll see how that plays out.
Steve, thanks so much. Appreciate that. Steve Mann, senior analyst covering the autos and industrials on a global basis for Bloomberg Intelligence. Well, in the summer of 2025, Barry Ritholtz spoke with Neil Katyal, the lawyer who argued the case against Trump's tariffs in front of the U.S. Supreme Court. Here's what he had to say about their legality.
The president has an easy fix if he wants to. He could go to Congress and seek approval for the tariffs that he wants. That's what he did the first time around, and as we talked about last week, that's something that failed in Congress, and so maybe that's why he doesn't want to do it. Obviously, these tariffs are highly unpopular, but nonetheless, the Congress is controlled by his party, and that's the place to start. Don't run to the federal courts to do what you can't do in Congress.
That was Neil Katyal, the lawyer who argued the case against Trump's tariffs in front of the U.S. Supreme Court. He was speaking with Barry Ritholtz. Barry Ritholtz joins us here. He is the founder of Ritholtz Wealth Management and host of Masters in Business here. Barry, what do you take away from the Supreme Court's decision here today?
Yeah, long overdue, long awaited. I think the market always has a hard time digesting data inputs that are kind of outside of their sweet spot. So when we get an FDA approval or the announcement of a merger or corporate earnings or non-farm payroll, hey, the markets are really good at integrating that into prices. I suspect it's going to take a little while for this to get digested. My personal expectation is there are a lot of winners and losers from this. I think that the winners are going to be obviously the retailers, because prices have gone up. We've seen a ton of different research that says somewhere between 90 and 95% of the cost of tariffs falls on consumers, essentially making them a VAT tax. So not only retailers, but manufacturers like Caterpillar and Deere, what aren't affected by the Supreme Court ruling, and we heard one of the prior guests say this, is all of the tariffs on U.S. auto manufacturers, on steel, on aluminum, that's a whole separate law. That's not the IEEPA law. That's a 232 law, and that's still up in the air. There's no resolution from this case for GM, Ford, U.S. Steel, et cetera. But when we look at companies like Toyota or Costco or Walmart, that Toyota filed a refund because all of the parts that either Toyota proper ships to their U.S. manufacturers that have a big price increase, this is going to work to those companies' benefits.
So I guess the question is for the markets, Barry, is, how much of a profit impact could the relaxation of some tariffs have on corporate America? Because I'm not sure we've got a great handle on how much it impacted them on the downside in the last several quarters.
Well, it just goes to show you the counterfactual is always what would have been otherwise. And look, the president inherited a strong economy, a robust economy with markets at or near all-time highs and profits at or near all-time highs. And so even pick a number, 175, 200 billion in tariffs that have been collected already over the past 10 months, arguably a lot of that comes right out of the bottom line for corporate America. So when we see these tariffs get refunded, and I'm fighting my way through the decision, reading the decision to figure out, all right, if you're a big company, you certainly have corporate counsel and resources to go through the process to apply for refunds. If you're a smaller company, I'm trying to figure out if how you go about this. Do you have to join some sort of consortium or maybe even a class action suit? Because it's not, it's not just like doing an online tax form and getting a refund. It's a whole process.
It's definitely a heavy lift for companies that barely have an HR department, barely have an in-house lawyer.
Well, I'm coming up with an app that anybody could use. Wouldn't that be good? Get some smart person.
AI can solve this.
Yeah, AI can solve it, exactly.
Well, let's wait for AI to solve just that. Barry, you are fantastic at kind of thinking ahead, thinking around corners, looking around corners. What do you want to know? What are the questions you're asking right now to kind of help us get through this period of uncertainty, a new period of uncertainty, once we kind of get through and start to understand how things move forward, whether the president can move right away on the tariffs under the different sections, or whether he's going to backpedal and kind of rethink everything?
So, yeah, I've been trying to think about second and third order magnitude results from this. It's not just the pebble you toss in the pond. It's the waves that bounce off of the other waves and how this works. You know, I'm not a political expert, so I'm always reluctant to venture into that space, but staying with market and economic factors. So a couple of things are very positive. The dollar in 2025 had its worst year since 2017, not coincidentally, 2 years that were both first year of President Trump's tariffs, first year of a new tariff program, first year of a Trump presidency in each of these cases. And the dollar fell 9.9% in 2017, 9.3% last year. This arguably could be very strong for the dollar, which would begin to call into question the rally in precious metals, gold especially. Silver has kind of been trading crazy. You almost have to look at it as a smaller, wackier little brother of gold. But I wonder if this caps the rally in gold. That's number one. Number two, I have to think that everybody that's engaged in any sort of tariff negotiation is going to rethink it and decide, hey, do we want to stick with these tariffs? Do we want to see if we can press our hand? That's going to be kind of interesting. It also, and perhaps most enthusiastically, look, depending on which study you consider, tariffs have cost the average American household anywhere between $900 and $3,000. And I suspect as you go up the economic strata, it's probably a whole lot more than that. That's going to essentially get cut in half or more, depending on what you're buying. If you're buying Birkin bags and Ferraris, you're going to see, and Rolexes, you're going to see your tariffs drop pretty dramatically.
Time to go shopping.
And so this is positive for inflation. This is positive for, the Fed has been warning that, hey, rate cuts are not a sure thing in the first half of the year. This is very positive for lowering CPI and lowering the possibility of rate hikes. All of this could lead to a reacceleration of the economy, and certainly in specific sectors, and I'm thinking in particular manufacturing and retailing and consumer discretionary. Those sectors can all do really well. We may, a lot of people have been talking about the possibility of a recession in the second half of the year. I think the Supreme Court just lowered the possibility of a recession by a not insubstantial percentage. And again, these are all second, third, fourth order effects.
Barry, thanks for jumping on. Appreciate it. Barry Ritholtz, he's the founder of Ritholtz Wealth Management, host of Masters in Business. I'm just got a note in my inbox from Peter Cheer at Academy Securities talking about this Supreme Court ruling, and he writes about rebates will be difficult to get. The first step will be deciding whether to make a claim or not. He says, by making a claim, will you risk upsetting the administration, which might be more detrimental to future business than it's worth? Maybe companies will view it as a sunk cost and move on. Interesting take there as we think about some of these rebates that may or may not happen to companies and in smaller businesses. All right, let's get a reset of those markets. We'll head down to Washington, D.C. Nathan Hager's got a Bloomberg Business Flash. Nathan.
That I do, Paul. Right now, the S&P 500 is higher by 0.2%, up 45 points, just above the 6,900 level, 6,907 for the S&P 500. The Dow Jones Industrial Average is up 0.25%, up 125 points. The NASDAQ Composite leading the gains, up 1.1%, up 250 points after the Supreme Court struck down President Donald Trump's reciprocal tariffs. Latest note from Bloomberg Intelligence, Supreme Court terminates Trump tariffs. They'll be back. President Trump has said that he does have a backup plan now that the Supreme Court has struck down the emergency tariffs under the emergency economic law. Right now, the 10-year Treasury is down 7/30 seconds, bringing the yield up more than 2.5 basis points to 4.09%. Yield on the 2-year is at 3.48%. Right now, 7 of the 11 main industry groups in the S&P 500 are in the green. The communications services sector is leading the gainers, up 3%. Energy is down 1.2%, with West Texas Intermediate crude down 0.2% at $68 or $66, I should say, 28 cents per barrel. Most actively traded stocks are in the tech sector. Nvidia is up 1.1%, Intel down 1.9%. The U.S. government does have a significant stake in Intel, and Amazon sort of straddling big tech and retail. That stock is up 2.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That's your Bloomberg Business Flash. Scarlett and Paul.
Nathan Hager, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and streaming live at Bloomberg.com/video. You know how Tom Keene likes to say, let's rip up the script? That's literally what we have done for the past 2 hours. We just ripped up the script. We do have scripts for this thing, how the show's supposed to flow. Gone in the wastebasket, and we've been on the fly getting, I think, really smart voices on the Supreme Court ruling from a legal perspective, from a policy perspective, and of course from a markets perspective. Our next guest is absolutely a great voice to give us some perspective here. Terry Haynes, he's a founder at Pangea Policy. Terry, put into context kind of this ruling from your perspective. What does it mean for President Trump, for his administration, for maybe some of his policies going forward?
I think, good morning, Paul, Scarlett. I think the answer here is much less than meets the eye. You know, I've been a voice for the past half year or so saying, look, markets, don't get way over your skis on thinking that the Supreme Court is going to decide all Trump tariffs are bad. That was never what this case was about. And that the Supreme Court's going to rule that there should be immediate disgorgement of all the tariff monies. That was never going to be something the Supreme Court decided because it wasn't in front of the Supreme Court. That's not what appeals courts do. Trial courts do those things. You know, I've heard an awful, you know, just in the past half hour of your program, I've heard an awful lot of still over the skis speculation about what happens next. What happens next, very simply, there are 3 things. One, tariffs continue. Secondly, the lower court, the trial courts decide they have to amass evidence and figure out what they think the best remedies are here. That may be disgorgement, that may not be. Thirdly, meanwhile, Trump has at least 5 or 6 tariff authorities. I think Bloomberg reporting that just went up said 5 other tariffs authorities, so I'll go with Bloomberg, that he can invoke immediately. Plus, he can ask the Supreme Court, or excuse me, he can ask the Congress to amend IEEPA to put a tariffs remedy into place. And right now there is a greater than not possibility that happens because they could use the same reconciliation process that was responsible for the One Big Beautiful Bill to create a new statute that is Big Beautiful Bill 2.0, something Lindsey Graham, the Budget Committee chair, has been talking an awful lot about. And it'd be very easy to slide in a half dozen words giving the president the tariff authority that the court properly ruled he didn't have. So, you know, I would urge everybody to take a very big step back when you're saying, well, you know, when will those rebates come? The answer is not likely ever.
Interesting. So what do you think the political calculus is for the president and the administration here about taking an aggressive response here, whether it be invoking some of these other tariff options or trying to go to Congress, as you suggested, because his opinion numbers are quite low. It seems like these tariffs are not popular. How do you think that political calculus will play out?
Well, I think they do all of the above. I think they very much believe in tariff policy, so they will continue with that. So they'll use all the existing tariff authorities. I think they almost certainly they will go to Congress and press on Congress to create the IEEPA authority that the 1977 Congress did not write into the law. That's really all this case is about, is that narrow question. On top of that, they'll continue to press forward. And, so the results for Markets really are minimal, as I think markets seem like they understand.
Yep.
The response for foreign governments, for example, is this isn't going to matter a bit. If my long experience with foreign governments is that they don't understand American law and policy very well. That's no criticism. They just don't. But what I can tell you is that tariffs will continue to be part of the negotiation, and this time on firmer authority than the last time. So that's not a good thing. And finally, the court's criticism really isn't of the president. The president overstepped the law, but they are going to want to. They are very specific about telling Congress, look, if you want to give the president some authority, you want to give an administrative agency some authority, you have to do it explicitly in the law, which has been a trend that's happened for quite a while. Finally, who ought to feel better about this? Lisa Cook ought to feel a little bit better today, because the Supreme Court has shown that it's not at all afraid to rule that the president might not have some authority that the president thinks he has. But Cook shouldn't take too much away from that, because the only thing the Cook case is about is whether or not the president already has cause to fire Cook. And if the court ends up ruling against Cook, it's largely because the president's people have not yet well investigated that and come to agreement on what the for cause is. So she can still be under peril going forward, even if the Supreme Court decides, as is before them, whether the district court was right or not in applying a stay and letting Cook stay. That's all that case is about.
Terry, thank you so much. Appreciate it. Terry Haynes, Pangea Policy, giving us his thoughts on the Supreme Court ruling. And I think it was a little bit, I would say, out of consensus view, from Terry, which is this is pretty narrow. Don't get too far out over your skis. While it could be certainly a policy rebuke to the president, tangible aspects of it might be less than some people believe. June Grasso joins us again, Bloomberg's legal analyst here. Bloomberg, June, you've now had a couple more minutes to kind of peruse through the ruling here, 170 pages, 6-3 ruling. Any thoughts here?
I just want to say that this is a landmark ruling, but beyond the impact on tariffs and what that means and the economics of it all, what's important here, and I think it's a great day for the Supreme Court and the rule of law, because the justices in the majority took the law, they looked at the Constitution, they looked at the text of the statute, and they said, no, he doesn't have the authority here. This is the power to tax. It's the power to give tariffs, and that's Congress's power. And so they reaffirm the separation of powers that we've sort of seen a little bit slipping on the emergency docket, where they've been allowing Trump to do thing after thing. They kept in line with what they did with Joe Biden when they said, no, you can't give student loans to every person you wanted to give to. And also, I think it's really important that two of Trump's appointees were in the majority in this, particularly Neil Gorsuch. As I said before, he has really been voting on the side of the president, for way back. So the fact that he was here with the majority, and it's a solid 6 justice majority, I think it's all very important for the rule of law and the integrity of the Supreme Court.
June, thank you so much. We really appreciate your availability today. A big day for the Supreme Court. June Grasso is our legal analyst at Bloomberg, and we appreciate getting her opinion here. I'm looking at the market here. We have a stronger tape here today. We've got the S&P's up 43 points. That's 0.6%. The tech-heavy NASDAQ doing a little bit better, up 244 points. That's a little more than 1% here. Certain gentleman from the Upper East Side, he likes the VIX, sitting right at 19 here. We'll keep an eye on that. 10-year Treasury yields a little bit higher, a little bit of angst there, up 4.09%. The 10-year, 30-year yield is even higher. We're at 4.73% here, so we'll keep an eye on that. Gold up about $70, so just above $5,000 per ounce. And Bitcoin, that's up 900 points. That's 1.3%, so there you go. I don't know what's coming up at the next hour, because in this studio in New York, Tyler Kendall, Tom Keene, TK Squared, now that I think about it.
It's too much.
It's too much.
Gee, what I noticed with the way we're wired up here at Bloomberg, it's hugely sophisticated. Paul, quickly here, does Nathan Hager go home?
No. I mean, he's everybody in D.C., they're on high alert. They got this ruling here, which was expected, as you guys know, but still, I think, well received by most in the marketplace, just judging by the market. All right, we're going to have more programming, more coverage of this coming up, Balance of Power. This is Bloomberg. Good morning.
All right, Paul Sweeney. I'm Joe Matthew in Washington. We can talk, can't we? It's great to see you. Welcome to the Friday edition. Yeah, TK squared. If you've been with us here on Bloomberg Radio, streaming live on YouTube, you know this is a big day. We've got the sirens up. And we don't fool around on a day like this. We're going to check the markets first, and we have team coverage coming up here. Can I say that as well as we throw the full force of Bloomberg News and the resources from world headquarters in New York down here to Washington, D.C. Tyler Kendall, bring us up to date. We're going to spend some time with the T-Rex of finance. Yes, Tom Keene is going to be with us, and Edward Harrison, the author of the Everything Risk newsletter, is going to walk us through the corners of the market reacting today, in some cases a bit counterintuitive, which is why this has been a fascinating couple of hours. Let's start right there, right now. Nathan Hager has the baseline set for us on Wall Street. How's it looking, Nathan?
Well, it's looking solidly in the green as far as stocks go, Joe. We might have to rip up the script on this hour. We just got a X post from Caroline Leavitt, the press secretary at the White House, saying President Trump will hold a press briefing on the Supreme Court's tariff decision, 12:45 Wall Street time. Keep it right here on Bloomberg for continued complete coverage this momentous day at the Supreme Court, with the justices in a 6-3 decision striking down President Trump's so-called reciprocal tariffs, as well as the targeted tariffs tied to fentanyl trafficking under the emergency economic law. We have tech shares leading the gains at the moment. The NASDAQ composite is higher by 1% right now, up 224 points. The S&P 500 is higher by 0.6%, and the Dow Jones Industrial Average is 0.2% higher. Dan Ives is global head of tech research at Wedbush Securities. He says this ruling takes a trade overhang off tech.
The biggest worry is that tariffs, what that could do in terms of data center build out, AI build out, chips, everything that we're seeing with China. Look, there's going to be other ways that they're going to try to go around this 232, Section 301. The reality is it's a huge blow to the tariff policy, and it's very bullish for tech coming out of the gates. That's going to be the initial take.
Most actively traded stocks on Wall Street right now are in the tech sector. NVIDIA shares up 0.9%. Intel is down 2.5%. Amazon straddling tech and retail, up 2.2%. The 10-year Treasury is down 7/30 seconds. The yield up 2.5 basis points to 4.09%. Yield on the 2-year is at 3.48%. The long bond, the 30-year, up more than 3 basis points at 4.73. West Texas Intermediate is down 0.2%, still trading at close to 6-month highs, with President Trump saying he hasn't ruled out a limited strike on Iran. NYMEX crude is trading at $66.27 per barrel. Brent, the international benchmark, is down 0.1% at $71.58. And COMEX gold up 1.8%, up $88.30, $5,085.90 per ounce, following the Supreme Court decision. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That's a Bloomberg Business Flash. Joe Matthew is in Washington. Joe?
Yes, sir. You spent the right day to be with us, Nathan. Thank you so much. He's been up since yesterday. And we have a lot to cover here. The Drudge siren is up thanks to the press secretary, Caroline Leavitt, on Twitter. X, President Trump, indeed, will hold a press briefing, she says, on the Supreme Court's tariff decision, 12:45 p.m. We'll see if he's late for his own party and when he speaks. We will, of course, bring it to you live here on Bloomberg. This is going to be one of these days. Let's just open the microphones, clear out the brakes. We've got a lot to do. And as I mentioned, we're going to spend a moment with Tom Keene after we get an update from Tyler Kendall, knowing that this, of course, is the centerpiece of the economic agenda that helped to bring this president into office. He's been talking about it since before he was reelected. Listen.
We're getting rich because of tariffs, by the way. I hope everyone understands that. Tariffs are bringing us hundreds of billions of dollars. Without tariffs, this country would be in such trouble, as they were for many years. Every prediction the critics made about our tariff policy has failed to materialize. 78% reduction in our trade deficit, and next year we're going to be positive if we keep it all going.
Now, here's the thing. He's going to have much more to say coming up in a little bit more than a half hour's time, knowing, and the market knows this too, he's got a lot of options at his disposal, at least 5 fallbacks. And that's where we start our conversation with Tyler Kendall, who decides to leave the nation's capital on one of the most important days in this administration. Tyler, of course, you've been up half the night as well, anchoring coverage from early in the morning, and it's great to have you with us here. The White House quick to respond on this one, huh?
Yeah, and we'll get more information later today, Joe, when President Trump apparently is going to brief the press and answer some of these lingering questions, of which there are a lot of them, including what's going to happen to those ongoing trade negotiations that are still out there, and how are our trading partners going to respond. Just last night, we saw the U.S. finally ink that deal with Indonesia, and we're hearing from India's trade minister in the last 24 hours that we could be careening towards a deal maybe next month, as soon as possible, given that negotiations have dragged on for so long. But does this threat, as you mentioned, that President Trump has these other federal authorities, these other tools in their toolkit, change that calculus for our trading partners? Section 232, for example, those national security tariffs that have already been levied in many cases, right? Those tariffs against steel, aluminum, autos, pharmaceuticals, those are already baked in. That's not what these end up being extended to. And we know that there are some other authorities too, Section 301, over alleged unfair trade practices. But Joe, you're going to hear the White House speak about how their flexibility is now limited. That's why they say they liked IEEPA, though it has never been used for tariffs before. It's typically used for a president to impose sanctions, for example, but they're going to point to the flexibility in the rate and the timeline that has now been taken away.
And Tyler, thank you so much. Tyler Kendall, live from World Headquarters in New York. They're already talking about that flexibility. Can you imagine, by the way, what happened to Tom Keene's friend Peter Navarro when this news dropped?
Oh, my
we'll
word.
be hearing from him.
I was thinking of this. I was well.
I mean, the heads exploded in the White House, right?
Yeah, I think that's accurate. I heard Terry Haynes very carefully there about the idea of folks that this is not a big deal. I'm going to go against that. I think it is a huge deal on a legal basis. I'll defer to June Grasso, who has prodigious chops, all the people at Bloomberg Opinion. But what I look at, frankly, more, Joe, is your area, which is the politics of it. And I think there's been a huge ahistorical struggle here with we've done this before. And I'm going to go back to 1890 when the arch protectionist William McKinley in Congress lost his seat in a complete Republican wipeout because the people of America were fed up with paying higher prices. And Joe, that sounds a little familiar, doesn't it?
Yes, and then someone's going to come on this show and say that the Supreme Court just saved the midterms for Donald Trump, and we'll see if that's true. But stick with me on flexibility for a moment. Earlier today, Fox Business, Kevin Hassett, right, talking about the options they have at hand. Here he is.
Should the Supreme Court make the wrong move, is we're going to adjust and use other authorities that we have, because we've now seen the proof is in the pudding that these tariffs work. They do exactly what President Trump says. I think the IEEPA is the cleanest, but if the Supreme Court doesn't like that one, then Jameson Greer has a backup plan that's just as good.
Is this, Tom Keene, why the Dow's only up 37 points? Why retail is down? How is retail down? How is Nike negative on a day when this was supposed to be a celebration?
A lot of uncertainty. Stephen Stanley, publishing at Santander, did a wonderful job of the theory behind this, which has been beautifully explained by our arch academic Douglas Irwin at Dartmouth College. And Professor Irwin talks about the revenue side, as the president will in his press conference here in 40. The smart people tell me they're going to lose 40%, maybe half of that, that will go away because of this ruling. Then there's a whole idea of restriction, infant industry. We want to keep business in America. But what Justice Roberts focused on, Joe Matthew, was reciprocity. And that's part of the Douglas Irwin calculation. And the way I read it as an amateur is this is a court, including Trump appointees, screaming for guardrails. Joe, I love the sentence. Find it right now. Amy Coney Barrett in the group, the president cannot impose tariffs based on a law's silence or vague language. To me, that's the heart of it.
You know, while we're reading from some of these opinions, look at Justice Gorsuch. For those who think it is important for the nation to impose more tariffs, I understand today's decision will be disappointing. All I can offer them is that most major decisions affecting the rights and responsibilities of the American people are funneled through the legislative process for a reason. For a reason. It's schoolhouse rock, Tom.
Yeah, well, it is, but I'm going to go. This was widely anticipated. We've seen the market reaction, and frankly, churning right down. NASDAQ up 0.7%. But the heart of the matter is because the president act in an assertive manner, as President Trump has, the appeals courts, as you know better.